We are currently looking at Datavault AI Inc., ticker symbol DVLT on the Nasdaq, trading at exactly $1.70 US dollars, down $0.16 or 8.60% for the session. Since the market is currently closed for the weekend, these figures reflect the final closing price from Friday's intense trading session, a snapshot that captures a significant moment of downward pressure for this volatile equity. When you see a drop of nearly 9% in a single day, the immediate expectation from the retail crowd, whether they are watching from a Robinhood account or tracking charts on interactive brokers, is that the company has hit a fundamental wall or that bad news has leaked into the ecosystem. The common belief here is that a penny stock trading under $2 is simply flushing out weak hands, or perhaps it is just another pump and dump losing steam. However, the reality of Datavault AI is far more complex and bizarre than a simple sell-off suggests. The reality is that this is not just a tech company sliding on earnings. This is a company undergoing one of the most aggressive, confusing, and high-stakes identity shifts we have seen in the microcap space. You are looking at a business that is pivoting from wireless audio technology to becoming a player in artificial intelligence, data valuation, and even Bitcoin-backed financing. The drop to $1.70 might not be a sign of failure, but rather a sign of the market's sheer inability to properly price a company that is accepting $150 million in Bitcoin for equity, while simultaneously promising to tokenize diamonds and gold. While the expectation is that this is just another red day, the reality is that DVLT is positioning itself at the intersection of three different bubbles: AI, crypto, and data. And the volatility you are seeing is the friction of that transition. Let us look closer at the recent market action because the volume tells a specific story. On Friday, we saw over 32 million shares change hands. For a stock with a market capitalization sit at around the $480 million mark, that level of turnover is incredibly high. It suggests that while the price was being pushed down to $1.70, there was massive liquidity absorption happening at these lower levels. When you compare this to the price action of a blue-chip giant like Tesla stock or Apple stock, where a 9% drop would signal a global macroeconomic crisis, here it signals a battleground between believers in the new data science model and the skeptics who remember this company as Wiza Technologies. The stock traded in a range of $1.70 on the low end to $1.92 on the high end. That intraday swing of over 12% shows that traders were actively fighting for control, and the bears ultimately won the daily close. This kind of volatility is exactly what attracts retail traders on SoFi Invest or those using Robinhood stock trading strategies. But it is also what keeps conservative investors at Fidelity or Vanguard far away. The technical damage done by this drop is real. It pushes the stock closer to its 52-week lows of roughly 25 cents than its highs of $4, creating a psychological heaviness that the bulls will need to overcome early next week. But why the sudden interest and the sudden drop? To understand that, we have to look at the narrative the company is selling versus what they are delivering. The company recently reported third-quarter revenue of $2.9 million. Now, in the grand scheme of the Nasdaq, $2.9 million is a rounding error. However, that figure represented a 148% increase year over year. Expectation says great growth, stock should go up. Reality says, wait, they lost 33 cents per share. The net loss is massive relative to their revenue, which is a classic trait of early-stage growth companies. But it's the source of that revenue and the future guidance that is causing this friction. Datavault AI is projecting revenue to exceed $200 million by 2026. Pause and think about that. They're sitting at roughly $3 million a quarter right now, and they're guiding for $200 million in roughly 2 years. That is the kind of exponential curve that sounds too good to be true. And the market's reaction, dropping the stock to $1.70 suggests that investors are demanding proof before they buy into that forecast. If you are using Schwab Intelligent Portfolios or seeking investment help, an advisor would likely point to this disparity between current cash flow and future promises as a major red flag. The core of Datavault AI's business model is a fascinating hybrid. They have two main divisions, acoustic science and data science. The acoustic science division is the legacy business, formerly known as WISA, which deals with high-definition wireless audio. This is real technology used in home theaters and consumer electronics, but it's not a high-growth engine. The new engine, the one driving the AI in their name, is the data science division. Here, they claim to be building platforms that allow companies and governments to monetize their data. They talk about information data exchanges and the tokenization of real-world assets, or RWAs. This is where the buzzwords fly thick and fast. They are negotiating contracts to tokenize assets like gold, diamonds, carbon credits, and even sugar. The idea is that you take a physical asset, represent it as a digital token on a blockchain, and trade it. It's a hot concept in the crypto world, but for a Nasdaq-listed company, it's a risky pivot. It places them in a sector that is highly scrutinized by regulators. When you see a company press release talking about trillions in real-world assets, you have to be cynical. Is this a genuine technological breakthrough, or is it a company latching on to the latest trend to boost their share price? The market's skepticism is visible in that 8.60% drop. One of the most startling developments, and one that you absolutely need to understand if you hold this stock, is their recent financing deal with Silex Holding Company. Datavault closed a deal involving $150 million, but this was not a standard wire transfer of U.S. funds. The purchase price was paid in Bitcoin. Yes, you heard that correctly. A Nasdaq-listed company accepted Bitcoin as payment for a massive issuance of equity and warrants. This effectively ties Datavault AI's balance sheet to the volatile crypto markets. If Bitcoin crashes, does their capital reserve crash with it? If Bitcoin soars, do they suddenly have a war chest to acquire competitors? This adds a layer of complexity that you simply do not find when analyzing NVIDIA stock or Fidelity mutual funds. It makes DVLT a proxy for the crypto market, which explains some of the extreme volatility. If you are someone who engages in online investing or self-investing, you have to ask yourself, am I buying a data company or am I buying a Bitcoin holding company with a tech wrapper? Let us take a moment to engage with this insanity. I want you to go to the comment section right now and tell me, do you think a public company accepting $150 million in Bitcoin is a genius move for the future, or is it a reckless gamble with shareholder value? Comment genius or reckless below, because I genuinely want to gauge the sentiment on this specific maneuver. Moving back to the analysis, we have to talk about the Dream Bowl meme coin. Just recently, it was announced that shareholders of a partner company, Wellgistics, would receive a Dream Bowl 2026 meme coin distributed in coordination with Datavault. When a serious data infrastructure company starts dabbling in meme coins and distributing digital collectibles for a football game, the line between serious enterprise software and retail hype becomes blurred. This is the reality that clashes with the expectation of a professional AI firm. Institutional investors, the folks managing Fidelity wealth management accounts or Interactive Brokers institutional desks, typically run for the hills when they see the words meme coin in a press release. This might explain why the stock is struggling to hold the $2 level. It feels like they're throwing everything at the wall to see what sticks. Audio tech, data valuation, RWA tokenization, Bitcoin financing, and now meme coins. But we must also look at the bull case. The contrarian take here is that Datavault AI is building the infrastructure for the next version of the web. If they truly have the patents and the technology to verify and tokenize real-world assets securely, the potential is indeed in the billions. The data value and data score products they mention could theoretically become industry standards for pricing data, much like a credit score for information. If they hit that $200 million revenue target in 2026, buying at $1.70 today would be the trade of a lifetime. This is the tension. The upside is mathematical and massive. The downside is operational and total. The company is currently deeply unprofitable with a negative margin that is frankly terrifying to look at. They are burning cash to build this vision, and if the revenue doesn't materialize fast, they will need to raise more capital. And how do they raise capital? By selling more stock, which dilutes you, the shareholder. We saw this with the massive warrant issuance in the Silex deal. The share count is ballooning, meaning each share